Hello guys, welcome back. Last video we discussed about technical analysis and fundamental analysis, and in addition to technical analysis, I'm just trying to slowly go ahead how technical analysis works. And in order to start this technical analysis, the base is to understand the candlestick, how the candlestick is formed, what kind of candlestick it is, whether bullish, bearish, and what is this green color, what is this red color, and you could see a small line above and below, what exactly are these lines. So these kind of things we'll try to understand in this video. So basically this video is all about understanding candlestick. So when you see candlestick on any chart, so basically the candlestick tells you four data factors. Those are nothing but open, close, high, low. Even if you see the green candle, if you see the red candle, these are the four price factors you can get either from the green candle or either from the red candle. Now let's try to understand why a candlestick is green in color, why a candlestick is red in color. So in practical scenarios, so market opens at 9:15 a.m. You all know that. And when market opens at 9:15 a.m., there is some price. So let's imagine 25,500. And market closes at 3:30 p.m. So you're all aware of this as well. And let us assume it was at 25,600, right? So as we discussed, this is open. As we discussed, this is close. Just remember, for deciding the candle color, we just need open and close. So we are not bothered about high and low. High and low remains same for a red candle and green candle. So high and low, I would say one thing, these two remains same for red candle and green candle. And this red candle and green candle will be decided only by two price factors. One is open and the other one is close. Okay, let's come to this example. 9:15 market opens, 3:30 market close, and within this 9:15 to 3:30 there is a price movement, right? Because if the market opens at 25,500 and if the market closes at 25,600, doesn't mean that the market should trade only between 25,500 and 25,600. Within intraday it may reach to 25,650, so which is high of that particular day. Again it may go down to 25,450, which is low of that particular day. And these are the four price factors which you can see in any candlestick, and depending upon the time frame you get the data of that particular time. Like if you are on daily time frame, you'll get the data of that particular day, and similarly on weekly time frame you'll get the data of that particular week. So time frames we'll discuss, you will get to understand much better once we go into the charts. Then we can see what exactly these time frames are. Meanwhile you can just focus on understanding these price factors. There were four price factors: open, close, high, low, right? In this scenario, what would be our candle? Basically, if you just imagine, market opened at 25,500 and it closed higher than open, so which is a positive sentiment. So basically the candle color would be green here, right? So understand logically, because the market has opened at 25,500 and it closed above 25,500, then the color would be green. Similarly, let's take another example, right? If the market opens at 25,600 and if the market closes at 25,500, so basically the market opens at 25,600, which is higher, but somehow it closed lesser than the open price. So in this case the candle color will be red. Now I hope you've got fair idea about how the candlestick is formed. Okay, now let's go and understand this in a candlestick. So just this is a theory which you can get to see the price factors what we have been decided. So now let's try to understand what we have been discussed so far. As I said, open here in our previous example, this open is 25,500 and this close is 25,600. As open is lesser than close, I would say close is more than open, then it is a green candle. And within intraday, what we have been discussed in this case is 25,650, and similarly on the lower side 25,450. So this particular line is called wick. So in trading terminology, this is called wick. Above whatever the line you could see, this is also called as wick, and this green portion is called as body. So just to repeat, whatever you could see within close and open, that is called as body, and these lines are called as wicks. So now you are able to understand the candlestick, a bullish candlestick, because the candlestick is green, so generally we'll call it as a bullish candlestick. Going to the other side, as we discussed, the market has opened at 25,600, but the market has closed at 25,500. So in this case, our close is lesser than our open. That's where this red candle comes into the picture. And as we already discussed, the high and low remains same irrespective of what candlestick it is. Even if it is green or even if it is red, our low and high remains same. Now I hope you got a fair idea about what is candlestick. Right, now let's try to understand this candlestick on chart so that you'll get more comfort. So before that, I'll just let you know about the time frames. As and when you open any broker or any trading platforms, so you can see this time frame. So basically I have added all this. You might be having daily time frame, but as and when you click down, you could see so many time frames. So what exactly these time frames are? Based on time frame you decide, the candlestick data will show for that particular time frame. Let's say like right now I'm on weekly. Whatever the candlesticks you could see, this price data is for a week, and if I go for daily, this price data is for that particular day. So similarly, if I go for 15 minutes, this price data, whatever the candlestick you could see, it is for 15 minutes. Okay, now let's try to be on the daily time frame till you get comfort over this technical analysis part. Okay, so right now I'm on daily time frame. Let's take one example to understand much better about open and close. So let's take this green candle here. Okay, so this this red candle here, basically red candle, how it formed when our close is less than open. So open is at this point and our close is at this point. When this is the scenario, then we can see the red candle, right? And similarly, if I say green candle, obviously your open is here and your close is here, so then you can see this particular candle as a green candle. And the parts which you could see at the top, at the below, these are wicks, like basically the high and low of that particular day. All right, now if I just place my cursor on this particular candle, you can see some data here, OHLC. So that is nothing but open, high, low, close of that particular day. Because we are on daily time frame, that's where you can see the four price factors: open, close, high, low of that particular day. Similarly, if I just say I went to the 1 hour time frame, I just place my cursor on any of the candlestick. So the data of open, high, low, close, whichever you could see, it is for that particular hour, right? So that's how these time frames, or this is how you have to understand the time frames and to read the data of any candlestick. So whatever the time frame you select, so it will be showing price factors for that particular time, right? So with this, I just wanted to revise and conclude this session, because I don't want to overwhelm with the data. Meanwhile, we can just slowly understand each and everything going forward. Just to summarize what we've been discussed, markets opens at 9:15 and closes at 3:30, so that's where we get open and close. If the close is greater than open, then it is a green candle, because the market has closed positively on that day, the sentiment is positive, that's where the color is green. So similarly, the other side, if the market has opened at higher but closes at lower, so then it is a red candle, because the sentiment is negative, that's where you could see the red candle. The open and high remains same irrespective of whatever the color of candle. And we discussed about the time frames. You could see, like, whatever the time frame you select here, you can find the data of that particular time frame on any candle. So I think that's pretty much for this video. I hope you got some insights about what is candlestick. I know, like, it's not practically possible to understand each and everything in one go. I would recommend you to watch this video once, twice, thrice, till you get the comfort about the candlestick, because this is the base for the technical analysis. Unless you understand this properly, it's really tough to read the patterns or read the candlesticks, which is really important in the technical analysis. So with that, thank you so much for watching. Jai Hind.